It's Sunday, March 22nd, 2020. This is All About Your Benjamins and your weekly mixtape and weekend review video. Well, I hope you are all okay after what seemed like the longest week ever. A lot of scary news headlines. The stock market was not any help either. And when I woke up this morning, I really didn't realize it was Sunday. Just all the days have kind of blurred together as we figure out I won't say new normal because this will not be the way it always is, but a temporary normal, balancing e-learning with getting work done and finding time for our spouses to have the time that they need for their jobs and to do the things that they need to do. So hopefully you're finding a new routine. We found a new routine here. Basically mornings will be dad as teacher helping out with the boys so mom can get her things done, and then afternoon will be dedicated towards working with clients and doing review meetings virtually and using Zoom and phone calls. So we're finding our way after 1 week. Hopefully you are as well. Let's get to the headlines that may or may not be impacting your financial plan and portfolio. And we're going to leave a lot of the coronavirus talk to everybody else. There's plenty of information out there, plenty of conversations going on out there. The only thing I will offer up is take what you read and see with a grain of salt, especially the projections of things that are out there and how bad this might get. I have no doubts that this is very real. I have no doubts that this could be very bad. I have no doubts that it will get bad. But I've seen projections that are just crazy scary. I've seen projections that we're overblowing everything. And again, equilibrium, there's somewhere to the extreme numbers, there's somewhere to the do nothing side. I think we're more over to the more serious side of things, but you don't know the assumptions, or even if the assumptions are disclosed and you understand them, there's a lot of things that go into it. One number off could change the trajectory of something big time. So I think you read it, I think you take it as one person's perspective, one thing that could happen, but it's not a guarantee of what it is, and use that to help you make the decision, hopefully, to do the things that we need to do to get past this. It's not fun being stuck inside, limited with where we go, but if that's what helps us get through that, then the sooner we can do this, the better. So that is the end of the Corona talk. You can get all the other stuff out there. I just wanted to say, be careful with what you read, be careful with what you circulate, and also the final thing is, a lot of stuff goes out there that's unverified. It's opinions, it's things of that sort. So just be careful with what you see, and also be careful with what you share, because that just continues to circulate the bad information out there, which incites people to be a little more scared. Two main articles on the weekend review articles. The stock market I mentioned was down. We're down below 20,000 if you follow the Dow. If you're in the S&P 500, I think it's down about 30 to 35% from highs just a few weeks ago. If you are in a diversified portfolio, you should not be down that much. That's why we diversify. But one of the part of diversification is having money in bonds, and that's what I wanted to talk about. Not so much the stock market. I think it's obvious why the stock market's down. The bond market is where we go for safety. The bond market is our safety net. When stocks go down, bonds are supposed to go up. That's why we have them in the portfolio. They generate income as well, but they're really there to be the buffer. But when you have an extreme situation like we're going through today, a lot of fear, people raising cash, they want to have they want to have dollars available to them. They go to the safest spot to sell, to do that, which is the bond market. And when you have a lot of stress in the bond market, you start to see some funny things happen. And the article talks about how there's some strains going on in the bond market right now. I did a video earlier this week that's not in the mixtape, but it's on the blog with Ryan Curlin from Alpha Architect, and we talked about the discrepancy in the final pricing of bond ETFs and bond mutual funds. They have the same bonds, they have the same index, meaning they're tracking the same area, but there's a difference in their pricing, what's going on there, and Ryan does a great job of explaining it, but we're seeing some things we don't usually see with bonds, and I only bring that up because if you check on your portfolio, you're going to see your bond funds over the last week or two are probably down, and you're going to think, my financial advisor told me to invest in bonds because when stocks go down, bonds usually go up. And I say usually and supposed to earlier because in normal situations that is what happened. People sell their stocks, they go into bonds, it drives that up. But now we're seeing people sell stocks, and we're also seeing people sell the bonds because they want cash, they want to be conservative. And these are not you and I, the average investor, that are really causing that craziness in the bond market. This is the institutions, the big money makers, the endowments, the governments, all of these big organizations, institutions is what we call them. They're the ones causing a lot of the stress. It's not you and I. The statistics actually show that a lot of the average investors are holding steady, or they're actually talking about buying into this declining market, which maybe is a little too premature, but is a better thought process. So anyways, be aware that the bond market is having some funny things go on. That's what happens when we have a lot of stress and a liquidity crisis. And it's not something we normally see, but it's something that we go on. We saw this back in 2008, 2009 as well for a period of time. But then kind of things stabilize and bonds will get back to being that safety valve that we need. So wanted to put that under radar. The other thing is the stimulus packages that have been talked about and going around. So we've had a few waves of stimulus packages. The big one that they're working on right now, which will hopefully come out soon, is more for the average American. Meaning they're talking about bailouts for the big companies, the cruise lines, the airlines, and there's a lot of controversy there because, especially with the airlines, over the last 7-8 years, they've done a lot of buybacks. And a buyback is when a company goes out to the market and buys back shares of their own stock. And the reason they would do this, one of the reasons they would argue they do this, is that's the best use of their capital. Meaning we have cash sitting in the bank account for the business. We don't need to invest in the company. We don't need to buy another company. We view our stock price as below where it should be, so it is a value. Let me go buy that and put that back into our account so that as our stock price rises, our company does better as well. Some people like that. Some people think that it's a way for the CEOs to boost their comp. A lot of them are paid with stock. A lot of them have bonuses tied to stock price performance. So if they buy back, they reduce the number of shares on the market. It drives the price up. The problem is if they spend all their cash buying back stock, and the belief is to benefit the executives better, more than their employees, more than the average American, now they don't have cash for an emergency fund, which a financial advisor would tell you you need 3 to 6 months of cash. These companies don't have an emergency fund because they bought back a lot of stock, which was again believed to be for the CEOs and the executives, and now they want help from the government. So that's why there's a lot of controversy around that. I tend to be kind of in the middle. I can see where buybacks could be a good thing in the right situation, but I also totally get where you were irresponsible with how much you spent and now you don't have money to get through. When you are a business that is very sensitive to whether or not the economy is doing very well. So one of those things in politics that frustrates me is that I see both sides. I probably err on the side of it's frustrating to see them get a bailout, but I also understand that it's important for some companies to not go away. I don't know if it's that important for the airlines or not, but anyways, getting too far into that. But that's why the controversy around buybacks is being talked about. The stimulus that we're most interested in, what kind of help do we get? What kind of help does the average American get? And there's a bill that is being voted on and worked on right now. The proposal that has been just out there is families would get a certain amount of money for adults and for children, but it would be dependent upon what you made back in 2018. And again, I'm not very political, I don't like to get that way, but that's frustrating to me because what you made in 2018 means nothing to what is going on today. You could have had a very good year in 2018 and now you have lost your job or you're going to lose your job, and because you did good 2 years ago, you don't get the help that you need. It doesn't really make sense to base your current needs and the current issue on 2 years ago. In 2019, tax returns aren't done yet. The date was extended, so if you haven't done your taxes, you have until July now to get those done. Yeah, July to get those done. So, be interested to see if they change that because I think a lot of people who are going to need help are going to get missed with this, which is not going to help the situation. If we're going to do this, you might as well go big, you might as well help everybody and make sure that's not there. And I operate in the belief that people will do well. So if you send checks to people who don't really need the money, they might be giving that to friends and family. They might go out to a local business and shop to support them. So I think that rather than trying to make sure those that don't need it don't get it and miss out a bunch of people who do need it, we would be better off just making sure everybody gets it who needs it, and if those who don't need to get it have a little faith that they might do something right with it. And I could be naive, I could be living in this utopian mindset that doesn't exist, but that's what I would recommend, or that's what I would like to see, not recommend. So that's it. Got a little lengthy, but a couple of things I want to say. The final things I want to end with is just make sure that through all of this you take time to take care of yourself and also allow time for your loved ones to have a moment for their own. If you're cooped up in the house, let your spouse or your children are old enough, get outside for a walk and just get out of the house and have some time to live. find a way to exercise. Release those endorphins, keep yourself healthy, because it's not going to be very easy, and this is just 1 week in, and I'm already seeing the boys get stir crazy, miss their friends. So I think that we need to make sure that we're finding ways to give ourselves outlets so we take care of ourselves, that while it may be frustrating to be stuck in, it may be painful financially, at least we can keep our health and our minds strong. So give yourself time to get away from things for a moment every day. Try to find some time to work out. Push-ups, air squats. You don't need to have a gym at home. There's a lot of things you can do to stay in shape and to keep yourself active. So with that, I'll let you get going. Check out the weekly mixtape. Some great blog posts there from some of my friends around the blogosphere, and I will see you next week. Trying to find the time with lack of practices to create more content and put more things out there to help you understand what's going on. So be sure to follow the blog as well. All right, have a great day, and we'll see you in the next episode.